Welcome to the Kindle Report, where I help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. In Friday's video, I discussed a target for the current sequence that we're in. I came to a realization of the exact pattern, what's unfolding, and I promised you that I would break this down in great detail tonight. I won't break my promise. We're going to go through the detail on the wave count, as well as bringing in some of the concepts within WaveTech that utilize both moving averages and the PPMs that I discuss every night to help for not only directional movement, but also for confirmation of the Elliot wave. It is important to understand that there is a very intricate set of rules that are driving the WaveTech concept, and this is what I'm presenting on a daily basis. Oftentimes, the configurations suggest there might be minor contractions or advances in the markets, and I go through those details from day to day. We've seen a very dynamic market that is being driven by some high volatility, as over the last week we've seen volatility kick up. This volatility is driving the markets, and I'll go through this more in detail. This is being done on Sunday evening, so I go through the WaveTech database. There's some very important things going on in the short-term database, which is also helping to drive the narrative, which I'll be talking to you about. Before moving into the technical section, let's talk a little bit about the fundamentals. Last Friday, we saw the unemployment numbers come out. They came in way better than expected. After the release of the unemployment number, there was a categorization error that has been reported, and it potentially is causing about a 3% error to the downside. So most likely the number should have come in closer to 16 or 16 and a half. But even at that rate, it's much better than the 19.8 that was expected. No matter how you slice it, it was a bullish report. As we look to this week for fundamentals, we have CPI coming out on Wednesday, PPI coming out on Thursday, along with the initial claims numbers that are likely to continue to show some filings for unemployment. It appears that a lot of the carnage is behind us. In spite of all this, we're starting to get a better feel for how the economy is coming back online. But the economy continues to move its way back to normalization. Well, we're a long ways from that, especially in travel, hotels. We are moving in the right direction, and I suspect that will continue to happen. Probably one of the more significant events when we start to see sports and other things start to come back in line. It's been kind of weird watching a NASCAR race with nobody in the stands. But this will all start to come back. We'll start to see more normalization as we go forward. In spite of all this, the anticipation of the markets have been substantial. It does appear they're going to want to move higher after a brief hesitation. Let's go and look at all the details that I put together for you tonight so you can have a good idea what's likely to unfold, not only for this week, but for the next 5 to 8 sessions, maybe a little bit more. Let's take a look. Before going into the technicals, it's important to understand the rotation that's occurring in the database. Now there's 16,652 symbols, and currently on an intermediate basis, we've got another 6% of traction this week, pushing the bullish percent up to 35.97. This is pretty significant. If it gets above 42%, this suggests there's a sustainable rally going on. But there's a lot of rotation that can happen in individual stocks. It's not always about just indexes. Now, the indexes can actually start to decline and stocks can start to rotate. Just looking at this, if you recall last week when I went to the database, we had 3 new buys. We had conglomerates, consumer cyclical, and services. Each one of those, you'll notice, show 5 of 427 days of average holding, at 5 of 513 on a consumer cyclical, and 5 of 164, much shorter period. But I want you to notice that conglomerates was up 10.5% last week. This is important when utilizing the WaveTech process, is to watch for these rotation. Now these signals, there's a lot of ideas that were generated here on an intermediate basis on the conglomerates, the consumer cyclicals, and the services. Technology has been long for about 20 sessions now, and it's only up 9%. So these things came on board and have triggered a substantial amount of traction. But that last rotation was substantial. Let's dig into the consumer cyclical sector just to see what kind of rotation was there and what kind of ideas came from this signal on a sector basis. So we'll drill down to consumer cyclical. You'll see there are multiple sectors. We also have this week, there's apparel, appliance and tool, and tires are kicking in this week. The dollar signs represent a new buy signal. Looking at the sectors that have traction, 2 weeks ago, we got recreational products coming in, and then last week we got auto and truck parts. That was up 11% in 5 sessions. Now, this is on an index basis. Let's click on the auto and truck parts and drill down a little bit, and you're going to see this is one of the new buy signals that came out last week, which was LAD, lithium motors. That was up in 1 week, was up 20.52%. So there's an explosion. But if you look at these stocks that are in here, they're substantial moves, up anywhere from 20 to 36%. So these are ideas that are coming out. We come down below here. There is one new idea that came out. Universal manufacturing is a new buy for tomorrow morning. These are intermediate term trends, which mean they, as you can see here, they're expected to hold, this 5-day trade is expected to hold 174 trading days. So these are intermediate trades. Let's take a quick look at the daily database. And this is what I was talking on the intro, that this is significant. You'll notice here, out of 16,652 symbols, there are 14,818 symbols long, only 1837 that are neutral, or 88.99% of all of the symbols in the database are long. And I can tell you, I've only seen this a couple times. Our intermediate database got to about 92% in the first couple months of 2010. That was where the market was way overdone. We started a correctional phase in 2010 and rolling in. Now, on a short-term basis, this is much more dynamic. Most of the trades in the short-term database run between 35 and 50 days on a holding period. So this database will rotate up here at this level, but this is going to be the next significant thing that's going to happen. When these exits starts to come, there's going to be not only profit to be taken on a lot of these trades, but you're also going to see an opportunity to buy puts and take the opposite position as these markets are going to retrace over the next several weeks. And this database will probably correct back. About 20% of the database will turn over, and then we'll see a churning. Let's take one of the sectors that has moved a lot. Look at the consumer cyclical again. We'll stick with that theme. You'll see these are the subgroups that are moving. Apparel and accessories came on the intermediate basis. Well, it's up 27%. Let's go with that one. So if we look at apparel and accessories and just see what is being held, these are all the trades that came out, and you're going to see that they're between 11 and 29 days have been in. Lulu has been on for 29 days, a 46% gain off of that. Got more to go based on a holding period, but we can actually drill into a stock like this and really drill in and take a look at and you're looking at the projected profit mean is 24. We've now exceeded that. The one standard deviation is 58%. We're getting close to one standard deviation on this return. It's very frothy, and this would be something to be looking not only for an opportunity to take profits, but it would be an opportunity which to potentially get short this stock. But this is the power of looking at the database and understanding what's likely to go on here. This is the power of looking at the database so you can start to see the rotation. To contrast and go back to the intermediate database, we're still seeing a positive rotation happen on the intermediate level, while the short term has gotten overbought and is likely to start a minor correction. Before getting into the details of the wave count and the objectives of this particular sequence that we're in, I just want to discuss something that occurred on Friday's action, and I saw some comments both on Twitter as well as on the channel that you folks are paying attention. That's awesome, and you're seeing these patterns that I've been talking about. What happened is that the S&P closed above its extreme. Matter of fact, it gapped through everything on Friday's opening. And in the analysis that I was talking about in the target range of that 3193 to that 3230 level, that expectation was for 2 to 5 sessions. Well, that all happened in one day, as we know. In a minute, I'll go through the details so you can see exactly what this pattern is doing and what's likely to happen. But this is the element closing above that extreme level suggests that we're going to see somewhere between 2 and 3 sideways to down sessions. Now, when I go through the wave count, you're going to see that this is potentially the top of a wave 3. There's going to be a minor 4, and then there's going to be a rally again. So this rally is not completely over, other than maybe a 3 to 5 day session, that depending on what happens over the next couple of days. While we're seeing momentum still very strong, what it's telling us is that the support is roughly 80 to 100 points below the current level where we're trading. I post the market grid in the community section for your download on the channel. So that's where you'll find the SPX numbers. But this technical pattern is going to be substantial, potentially move down toward the 3104 level, possibly down to 3086. And you'll see when I go through the wave count and the expectations for this pattern that this is in line with expectations for the next several sessions. Okay, so I made a graphic to break down what's going on within the wave count, and this has been a very complex wave count. There's some very interesting symmetry unfolding right now, and it's almost perfect. But the first wave, we have wave 1 here. This wave here is actually 446 points in length. Wave 3 from this bottom to this high is actually 432. And this current wave from this 2766 low up to where the high was on Friday is actually 445. And this is amazing how perfectly symmetrical these moves have been. Every advance has been the same. Now, I'm going to talk to you about some basic theory here. The first theory that we're going to talk about is the rule of alternation in Elliott wave. And what it says is if the first correction is simple, the next correction will be complex. So as we just draw in this wave 4 pattern I have drawn in here, this area here has been a very complex ABCDE pattern. I'm not going to go greatly in detail, but I want you to understand that this pattern suggests that we're now in the 5th wave. We're in 5 of 5 on this pattern. And I mentioned about an ABC pattern, and I'll go through that as we go through the weekly. This is going to be a long video tonight, folks. So what this pattern is telling us is that we're in the final leg up, and that because of this symmetry that I talked about a minute ago, this basically 440 point wavelength that's happened so far, my expectation is this down arrow here will represent a 2 to 3 day, could extend into 5, but I don't think so. I think it's going to be very short, and then we will resume a rally. And you see the target up here is 3382 to 3454 on the upside. So this is substantially above where we are right now. This next sequence won't start for a number of days. A lot of folks were really thrilled because I talked about the top of the sequence. What I discussed on Friday's video was the minimum target, which obviously was met. So the target for the minor wave 3, which is the 3 with the circle here, is 3228 to 3279. This is still probable. However, what I discussed when looking at the live chart a minute ago, that close over the extreme may suggest that we saw the high on Friday at that 3230 level. So this level has been satisfied. It could extend, but most likely it is over. The ultimate target will be that upward 3382 to 3454, and that will be determined by the type of action we see over the next couple of days. I'll be able to nail this down. The other thing I want to point out is that the momentum on ppm1 is 0.81, ppm2 0.56, and ppm3 is 0.38. This is significant, and this suggests that even if there is a minor correction, the 10-period moving average is going to hold somewhere around 3084, which is the downward target on this sequence. And then we should see a sharp reversal, and there's much higher prices still in this pattern. The only thing that's going to negate this pattern is a close under the 3062 level. If that were to occur, then that would suggest that there's a different pattern unfolding, that this was an ABC and there was no impulse wave. But the fact is, the confirmation here is twofold. Is one, that the market is staying above the 10-period moving average, which confirms that it's in a wave 3, and that ppm1 is tracking the 10-period moving average, is at 0.81. This is in an extreme trend mode. Anything over 0.25 is bullish. So at 0.81, there is less than a 10% probability to decline below 3062. That number is jumping around 20 handles a day. That'll put it 3084 and then 3100. You can see the progression. As long as the momentum stays in ppm1, this is what's going to happen. Before moving on to the weekly chart, I do want to discuss the signal that I've been talking about. We have a signal on the cash at 2842, and if I go over to the futures here, you'll see that that trade came in roughly at the same time at 2858. So this is about a 340 point trade right now. This momentum is telling you that this trade will stay on. We're not even close to a potential sell signal yet. So the bottom line is what I've been talking to you about so far tonight, is that this pattern is likely to see some backfilling, but not very much. 3084 is the downside. It's about 100 points. And in this volatility range, that's really not that big a deal. We should see a resumption to the upside. I will be able to determine that over the next several days after we see some of the action. Now, the thing that will negate all of this is a close above the 3230 level. That will tell you that we're going to that objective I just showed you up around 3270 before that wave 3 will be completed. Just to further expand on the concept that I talked about in Friday's video, that we're in an upward ABC, I saw some comments on the site that somebody said we exceeded the 0.76 level, so that tells you this isn't a C wave. That's not true at all. You could have a double top, and B waves can make a new high and you get an irregular top. Not unheard of at all that B waves can make new highs. This is just another large pattern where we're still going to see this move higher to the levels I mentioned in the analysis just a few minutes ago, and then we're going to see a retracement, whether we go back below the 200-week moving average, where it goes. That's too early to tell just yet, but we are, as I pointed out, we've got the short-term database at 90% long. There's virtually almost nothing to buy anymore, even though it appears that there's about potentially another 10 or 15 days on that database before a big rollover happens, but we should start to see that happen. I will continue to follow that and discuss it on the channel over the next several weeks. As we go back to the beginning of this sequence, when we got this first decline down, it looks like a three-wave ABC. Now we're seeing another three-wave ABC. It's just a matter of, do we get above 3,300? Do we get up in this range and retest this high? I've been talking about more likely a W pattern to unfold. I was talking about that way back in March. Until we see more of this pattern that's setting up here, I believe that the original analysis I did a few minutes ago, that we could go up to those upper levels around that 3380 level, is very likely. And we'll just continue to monitor it and go on. But remember that short-term trades are still long. We're still seeing a positive rotation in the database. So overall, things are pretty good. There's not a collapse going to happen at the moment. We're going to see a minor decline at best. We're ultimately likely to go above this 3279 level and move up toward the levels that I mentioned a few minutes ago, above 3380, 3450 range, which would be a challenge of the all-time highs. Just to summarize, what I'm looking for is a 2 to 3 day decline off of the levels that we saw on Friday. If we close above 3230, then we'll see extension to 3279. Most likely what we'll see is a top to set up over the next couple days if we didn't see one on Friday, and then a backfilling into 3080, and then one last hurrah for this market. This will complete the video for tonight, and on the live stream on Wednesday at 1:30 p.m., I will definitely dig into more of this after we've had an opportunity to see how this thing's trading this week. Have a great day trading. Don't forget the market grid is in the community section, and we'll talk to you tomorrow night.